Hey everybody, Boris from BK Forex. Welcome to the weekly update for technicals for the commodity dollars, Aussie dollar, dollar CAD, and Kiwi dollar, July 9th to July 13th, 2018. And this week was really the return of the COM dollars, especially end of the week saw a very nice strong rally amongst the high yielders, Aussie and Kiwi, as U.S. yields continued to kind of wobble. And even though U.S. data was relatively good, provided absolutely no impact on the yield front. So you had a nice short covering rally in both Aussie and Kiwi, and CAD, of course, has its own story, which we're going to focus on in just a second. So what's interesting is that when you look at the levels pretty much just remain the same, but we've had massive bounces off the support that we talked about last week. So 73 really took a nice bounce, and we're now trading 74.30 in the Aussie, with 75 still the resistance. CAD is inching its way towards the 130, and that's probably going to be the very key level this week that everybody's going to focus on. With 134, a very, very clear double top now that has been essentially put in stone. And Kiwi, which we talked about also, that the 67 was a very serious support level, that essentially provided a very, very strong bounce for the Kiwi. We're now back up above 68 with 69 as the overhang for the pair into the week. The calendar on the COM dollar front really centers only on Canada. It's just only one event this week, which is the Canadian Bank of Canada rate decision. It's really the only thing that's of any import. Manufacturing PMI out of New Zealand, that's not going to be a big mover. But the Canadian data is going to be important, because if the Bank of Canada hikes, and there's an 80% chance that the Bank of Canada will hike, the critical thing here, though, is whether they're going to communicate that this is one and done, or whether they see potential for more hikes as the year progresses. And I think they're going to leave the door open. That's the key thing. Even though there's a tremendous amount of pressure, there's a lot of trade tensions with the U.S., oil is relatively strong. The economy has done quite well, not superb, but it still remains in an expansionary mode. And I think the Bank of Canada really wants to get ahead of the growth curve, and therefore possibly accommodate, or at least plan for, budget for one more rate hike beyond this one, which would really put the Canadian dollar in this very elevated club of 175 yields, with Kiwi, dollar, not that many yields in the advanced industrialized world that are going to be that high. So that certainly should provide a little bit of a scope for upside for the CAD. So let's take a look at the charts here. We can actually start with the CAD. First and foremost, you see how it's coming into the 31s. It broke the 20-period SMA here. This was a double top of the 134 that we've been talking about for the last couple of weeks. And now this is the 500-period SMA, which is essentially around the 130. That's pretty much the key support area here that we're looking at. And so there's scope here for about 100 points to the downside into the trade decision. There's certainly scope here for a move to the downside into the trade decision. If the trade decision turns out to be hawkish rather than dovish, then there's scope to even potentially move all the way to 28. So there's a lot of movement to the downside here, positive CAD, negative dollar CAD as we go into next week. Aussie dollar saw a very, very nice rebound off the 73, which turned out to be a pretty decent support area here for the last couple of days. We're now facing, however, this big resistance at 74.50. That's really going to be the key thing. For dollar to show true weakness, that is, for the market really to begin to doubt the dollar's second half strength, the Aussie needs to clear 74.50, and if it does that, then we have a reasonable chance now then to trade 75.76. That's really the big resist point here. And with Kiwi, that level is essentially 69. Also similar kind of a story, but a very, very powerful push in the Kiwi today, as essentially short-term yields in the Kiwi and in the Aussie are rebalancing against the short-term yields in the dollar. You can see that the 10-year, despite decent non-farm payrolls, is actually declined, and that's very much a symptom of the fact that the currency market, or the fixed income market, really thinks the second half of the year could be much more problematic for the U.S. economy than it's currently experiencing. So the comeback in the high yielders against the dollar, I think, still has scope to run, although limited. It's maybe another 50 to 70 points in the Aussie and the Kiwi, another 100 points in the CAD. But nevertheless, the momentum is there, and we have possible extension here to the 69 in the Kiwi, 75 in the Aussie, and 130 in dollar CAD. That's how the COM dollars shape up. Wish you guys the best luck, the best of trading. Boris, over and out.